Okay, welcome to the Swing Trading with Cycles channel. This is our precious metals update for, essentially you can think of this as the weekend update. I am doing this while the market is open though, because my schedule allows it, so I'll do that. So we can actually see some live trading on like things like GDX. We will start with gold as we usually do. It is November 11th, so it's Friday. So it's about 2:30 right now, so we have about 90 minutes to left for trading in the regular market hours. So we won't have a complete weekly candle, and obviously, a lot could happen in the next hour and a half. But this gives us a good sense of how we're going to kind of close out, right? So we'll start with gold, as I said. We'll look at the daily chart, and we talked about this, right? This notion that this move down into here was very short, just 19 days, and we had this move down into here, which was 18 days, and then we had another move that was around the same. And so we kind of just combined like this move and this move into one cycle, but a very bearish cycle because it topped out on day 5. It doesn't matter how you want to think about it. If you say this is a cycle, then it's still bearish because that's a really early top. But the point there is this is most likely a new daily cycle. If you want to quibble about moving averages, we're well above the 10-period moving average. That's what this blue line is. And interestingly, we are on approach to the 200-day moving average. That is this yellow line I just added here. Just reference point. I think moving averages are lagging, so if you're waiting for moving average crossovers, that kind of thing, you're late. You want to use price action. You want to use trend analysis. But you would think that we're going to at least test the 200-day moving average, and if we blow through it, that will, of course, be an indication that the uptrend is continuing, right? But day 6 of the daily cycle. Like, look at the fact that like we had this rally was actually pretty strong in real time. It looked great. Obviously we know it petered out, but this is a nice move, and we talked about this in the last video. This little consolidation, then a big move up. This little consolidation, then a big move up. This is a pattern. This little consolidation is your higher low. That's how you control risk, right? Your stop goes somewhere below here, somewhere below there, and then you can kind of walk your stop up. And now we have this little hammer candle. Your stop goes somewhere below here, theoretically. But day 6 puts us relatively early in a daily cycle, so we could get to a nice little test above the 200-day moving average before we get any kind of like rollover into a low. That's always good. You want to be making big moves early in the cycle so that you have time to complete a breakout, if you will. And if we look at the weekly chart, we have this kind of rare, kind of sort of triple bottom thing happening. So I call this an ICL on week 15, right? And that's after a really long ICL. So this whole thing was 31 weeks. That was the one that included the war, where we topped out in March, right? We had this really ugly looking candle, which created a really ugly looking monthly candle. But then we got the swing high, boop, boop, next week. Then we got some consolidation, this fake out bearish outside candle on the weekly, and then a little waterfall decline, a bounce, another waterfall decline. And then we had this was your low, right? This day 31. And then we had this rally, which was pretty convincing in real time. It topped out on week 3, right? We closed above the 10-period moving average. If you wanted to draw some kind of declining trend line, you could say we closed above that as well. But in the next week, wham, right? And I believe that is the cycle that just ended, right? That was the ICH, the intermediate cycle high, the weekly cycle high, the swing high that started the downtrend that potentially just ended, right? That happened on August 8th, or I should say the week of August 8th, right? And then we proceeded to fall for 12 weeks, right? Because then the low was on week 15. And remember, this is like the 3rd time we've hit this level, right? Last week, this candle here. And we had this little rally here, which was convincing in real time. Also notice this yellow line here is a 200-week moving average. So we had periods where we closed below it, then we closed back above it, then we closed back below it. So kind of playing with it here. We did close last week below it, and now we're certainly going to close this week above it. As I said, it's 2:30 today, so not much day left in the trading day, and it's a Friday, so This weekly candle is almost complete. And my God, you can see it really stands out. Like this weekly candle is about the size of all, like, well, let's just look at that. I mean, wait a second. So the low of this candle is 1681 and the high is 1770. So that's about $100. And this is 1664 to 1770. Yeah. So this candle is literally the size of these 4 candles. So 4 weeks of price action of just kind of going higher, making higher highs every week. But we did that all in just 1 week. Boom. That is interesting, right? That's something that you want to take notice of. Now, I wouldn't be surprised if we got some consolidation after such a huge move on the weekly chart, after like some consolidation to kind of digest the move. But that definitely bodes well, right? So I would put us at week 1, this week being week 1, and a relatively short cycle, one that could catch one off guard. Most importantly, this bullish outside candle on the weekly chart, right? We made a slight lower low below last month's low, right? So last month's low was 1617. We dipped to 1671, right? Like less than $1, right? And then we went green, and now we've made a higher high above last month's high by quite a margin. And so what that does is it makes this a swing low. Well, what's the low on this? So that actually still didn't go below the low in September. So like if you want to be pedantic about it, that makes September the low technically, right? Like that, like technically we'd be excuse me. This would be month 2 of the sort of advance. And this would be the one where you're like really kind of proving yourself. Now that said, be aware there are still 13 trading days left in the month of November. So that's that's an eternity, right? Because generally a month has like something like 20, 22, like in the low 20s. So there's a lot that could happen in this candle. That's always important to understand how candles transform. Because this candle right here was really, really beautiful and green. This candle was really beautiful, green and full. So was this one at one point. Listen, anytime you see upper wick, that means there was a point in time when that candle was bright green. That's important to understand and acknowledge. Because when you look at real time, you can temper your emotion that like, oh, wait, yeah, right. This thing could reverse pretty hard, especially if you're relatively early in the candle. Which is why when I talked about that weekly candle, that's important when things happen. This is a Friday. There's like 90 minutes left in trading. This candle can't change that much, right? Like just statistically, it's not possible, right? Not much is going to happen in the next 90 minutes. So when you get to the last 2, 3, 4 days even of a monthly candle, it's probably going to look the way it's going to look unless you get some kind of violent move in those last several days that completely changes things. So that's important, like context to bring into everything. But as we're thinking about the context of these longer term cycles, that 7 to 8 year cycle for gold, this might be it, right? You get a big bullish outside monthly candle. Let's look, the last 8 year cycle, let's examine that really quickly. Was not a bullish outside candle, but I mean, look at the follow through on that, right? That was just pretty clear, right? This one was actually tougher because it was actually an inside month. So you actually took you a little while to kind of climb out of that hole. What about this one? Yeah, like they're each pretty unique. Yeah, this was more grindy. Yikes. And yeah, this candle, that was hard to stay long for. So suffice it to say, like the move out of the cycle low can be kind of rocky. The other thing I would note is that we did close below the 50-month moving average last month. And so you could say, all right, well, we checked that box. We're good. Because you can see we do close below, like that was your last, I mean, we like lived below that one for the last 8 year cycle low. But it doesn't mean we have to do that. These are all just additional data points you might want to just kind of keep in mind. But this looks really bullish right now. But again, we are really early in the month. Yet at the same time, the Dixie is breaking down. Definitely take a look at the update I did on that. We may have gotten the 3 year cycle high for the Dixie, for the dollar index, in September, which means we may be in a declining phase of the 3 year cycle. So we may have a multi-month decline, like basically all of 2023. So that has really big implications. And I flipped over to silver really quickly. I mean, silver has a monthly swing low on the board. It does that by staying above 21.22, right? That makes September your swing low, right? That can reverse again, just like we just talked about, because there's a lot of months to trade. But I mean, look at this move down, and now we're trying to pull like a reverse symmetry. I'll actually go back to gold. I almost forgot. We should certainly look at the quarterly chart, because that's the other thing that's going to close in another month. Now, for the quarterly chart, we would need a move above the high for that level, which is 1814. So that becomes a magnet at this point. That's like your next kind of upside target. So that's interesting. I am going to just mark that down real quick. I'm going to use that. And so if you don't know, they have micro futures available for gold, which are just kind of really affordable. I mean, the minimum margin is like maybe 1,500 per contract, but 1814 is a good near-term goal, and we're sitting here. And just to be clear, this is gold CFDs, and so I'll have to look up that equivalent level on the futures because they are trading at a difference, but it's the same chart pattern. Just you can apply that to the chart for the futures if you wanted to. So yeah, I would think that we're gonna get a quarterly swing low. Like, quite frankly, but to be clear, we need a quarterly swing low to have a major cycle low. That's how it works. And then eventually we're going to need a yearly swing low as well. Like, this is your last 8-year cycle low, and you can see the swing low, right, on the quarterly, right? You can see the swing low on this quarterly. That's how it works, right? And so that gives you a nice near-term target. You're probably going to see some kind of resistance when we get there. And it's going to be important to see how price behaves when we get there. And if we look at silver, because we know silver is already ahead of gold on its monthly chart, that means by definition it's also ahead of gold on its quarterly chart. And what do we have for silver? We have a swing low on the quarterly chart. That is really important to know about, right? That is incredibly important to know about. Again, in that same vein, this thing has a long time to close, so there's no way to know if it could certainly reverse, but right now, as higher time frame signals go, that is a very powerful one, and one that we definitely want to make sure that we're paying attention to. And that is active above 2087, actually. And again, this is silver CFDs. Definitely take a look at the equivalent level on the futures. And if we look at the daily chart for silver, now this is in a more precarious position because we're actually on day 18 of the daily cycle, which means we're getting late, right? But at the same time, this was clearly a consolidation zone that had this was your swing low that started it. So if you counted from here, right? So 1, 2, 3, 4, 5, 6, right? It puts you on the same day as gold. Another way to look at that is gold made a lower low on this day, and silver was so strong that it did not make a lower low. It made a higher low. That is incredibly bullish. Also note, all of this consolidation is happening around the 200-day moving average. Not that the 200-day moving average is something magical, but it's just a good reference point that you want to be on you want to be on the right side of that thing if you're long, obviously. You can see we got wick, we got a close above it, and now we're getting this kind of consolidation, but still happening above it. Again, that's an important just reference point. And if anything, this consolidation gives you a chance to get in. Because what you have in this really ugly doji candle here, and is it day 18? Let me just make sure that is the case. Because what you have in this doji candle it means the next candle is going to be an inside candle, almost certainly, right? Actually it's day 20, right? So we're even later in the daily cycle. So again, you're expecting the daily cycle high any day now, right? Which means you're going to get a swing high and then a little pullback. I shouldn't say a little pullback. You'll get a pullback, right? Like this was a daily cycle high, right? This was not a good daily cycle high if you were long, because this was the pullback, right? It was a massacre. You want to avoid that, right? You want something nice and gentle, right? Like This has been our trend, right? We've done it, something like that. We kind of moved around violently in here, and then we went like this, that, this, that, this, that, and you want something like that, right? Something nice and something nice and sustainable, right? Is what we're looking for. And so, as I said, because we are, we have this kind of doji candle where there's a lot of wick on either side, it means the next candle that opens, by definition, is almost certainly going to be inside, right? Like, for example, right? Like, let's just pretend that that's your candle that opens on Monday. Like, think about that, right? It's going to open either on this side of the range or this side. Like, I'll zoom in, make it easier. It's going to open on either this side of the range or this side of the range, right? Because this is just all wick, right? Like, but like, it needs to get outside of these borders. You can almost think of it, right? The more wick you have, the more border you need to get out of, right? And so wherever we open, it's going to be a question of like, like, is it going to open like here and then fall below this level and then continue the downtrend? Or are we going to break higher, right? That's what it all comes down to. But that, and this is where patience plays. That means you may not get your real move until Tuesday, right? Maybe you get some consolidation here on Monday, and then Tuesday you have a candle that either breaks above it or breaks below it. Obviously, you can just break right below it or right above it on Monday as well. We'll have to see. But that's the way you want to kind of think about this, sort of your reference point. And again, thinking about the context that we're early in the daily cycle, we're later in the daily cycle, that favors potentially a move lower. And generally, we cross below the 10-period moving average. And so that tells you, and that is down here, below 2070. So that kind of gives you a real rough ballpark. And so if we move on to the daily chart, looks to be week 10, so not super early in the weekly cycle, but we did make a higher high. And the same thing I was talking about on the daily, because of this wick, we're going to probably have an inside candle open next week. And so we'll need to get outside of that range. So it's going to give you very clear levels of what you're looking for. And finally, we'll do GDX. And so I love the fact that miners have been leading here. And today we are getting, we had a gap yesterday, and I tweeted about this, how you could use that gap as your stop. And now today we've had, and we'll zoom in here to the hourly chart, but you can see we have this candle that's trying to go from red to green in real time as we speak. That gives you your stop area, right? The low on this candle is 27.83. So it gives you a notion of like, you probably don't want to be below that, right? If we do look at the hourly chart, I'll get rid of these moving averages. Right, so we are just like, we're consolidating above 2790, call it, right? Like, all of this is just consolidation after this gap up. Like, you can see this is a trending move higher, that's a trending move higher, and so this is presumably your consolidation before another trending move higher. But yet you also know your clear risk levels. If it falls below a certain level, it's likely it's going lower. Of course, that could always end up being a false breakdown. And so depending on your style, your time frame, your situation, you do have to be, willing, able, and, just not emotional about necessarily getting back in if the signal triggers again, right? The other thing that I would call out for miners, let's go back to the daily on this, is I think we're above the 200. No, we're not. So we're still below the 200-day moving average. So that becomes a bit of a target here, right? And on the weekly, look at this big, beautiful green weekly candle. Week 6, we made a high above this previous high here. We're above this swing high here. And so we are clearly trying to reach out to test the 33 area. And we're down here at 27. So that is a good little risk reward of $5 to the upside. And you can easily find in a time frame, like, I'm assuming $1 stop could easily work. If you got in here and you put yourself at the low of today, right, that's a lot less than $1. I'd say that might be too tight, especially if. And then so here's the interesting thing. So go back to understanding If we should expect a pullback. This is only day 6 for GDX theoretically, same count as gold, so still relatively early. Yet silver is kind of early, or I should say, it's kind of late, and so it's going to be interesting to see how they coincide, because ultimately you could see a situation where some of the precious metals complex makes a lower low and some of it makes a lower high, right? Like maybe silver has a very mild DCL or daily cycle low, and something like GDX and gold have a really mild half cycle low, something like that. We might see some kind of coordination that way. And if we let's look at the quarterly chart for GDX. We are not quite there, but once we get above 28.37, that gives us a quarterly swing low. So same condition that we have for silver, same condition that we're targeting for gold. We're at that point, right? And that's exciting. That's the kind of higher time frame signal that we're looking for. That would suggest that we're ready to kind of rock and roll. We do have a major cycle low behind us. So that's really exciting. Things are starting to kind of shape up for the precious metals complex. And the alternative, of course, is this is going to be a lower high, which would mean a pretty powerful trending leg lower. And we'll get to that if we get to that, of course. But right now, the signs are certainly bullish, I'd say.